Thank you for sticking it out. Thank you for enjoying my face all day with or without coffee. The day is still young as we have the last panel ready to launch into a great conversation. And you bet your bottom Dogecoin, I'm very excited about this conversation on all about stablecoins, DeFi and financial crime. So without further ado, let me please introduce an industry leader, Alex Côté, who will be moderating the panel. Just a few words about Alex. I don't read news. I read Alex's LinkedIn posts for all things crypto, compliance, AML. So if you haven't followed him on LinkedIn, please do so. And if someone would be so kind as to drop everyone's LinkedIn profile link here, we'd appreciate it. All right, bring it on, Alex.
Thanks so much, Janisha. You're honestly too kind. Yeah, we've heard a lot of great sessions today, starting right off with trends and challenges of crypto compliance and this year and next. We've heard about MiCA, FATF, and everyone's favorite regulatory change, the travel rule, moving on to financial crime compliance on Web3. And we just finished with crypto compliance expectations from both FinTrack and RCMP. So today, like Janisha said, we're going to be talking all about stablecoins, decentralized finance, and financial crime. Just some housekeeping items before we kick off the panel. Make sure that if you're a keyboard warrior and you're in the chat, make sure you post your questions to everyone and not just the hosts and the panelists so everyone can see your questions. And then if you have any kind of specific questions that you want to ask the panelists, please go ahead and toss that in the Q&A, not the chat. And just one last reminder regarding the awesome virtual networking event we're going to have right after this panel. It's a great opportunity to make some connections, meet some of the panelists, and of course, meet some of your colleagues. Thank you all for attending. Really excited to chat with some industry leaders today about decentralized finance, financial crime, and some of the challenges we're really starting to see in this space. I'm joined with me with some fantastic professionals in this space. And I'll just kick off by letting them introduce themselves. Melanie, let's hear from you first.
Putting me on the spot first, eh? Hi, for those who don't know me, my name is Melanie. I'm a crypto compliance consultant, currently working at a large virtual asset service provider that's international. I'm also a crypto advisor for TCAE, and I have more of a pure crypto background versus traditional finance. I started mining back in 2015, did some Bitcoin and Monero, before moving on to professionally working as an investigator as of 2017 for a bunch of different exchanges. And on the side, I'm a certified chain analysis trainer, so I help people learn to do the job that I do, and occasional bounty hunter for stolen cryptocurrency. But I'll kick it off to Paul.
Thanks, Melanie. Hi, everyone. Paul Burak. I am currently leading the compliance function at ShakePay, which is one of Canada's largest crypto exchanges. I started my career actually working at FinTrack. So I started like literally as far to this side as you can in the public space, slowly kind of transitioned over, did consulting, worked at a really large financial institution until I really went down professionally down the crypto rabbit hole a little over a year ago. But I mean, I had an interest in crypto, geez, probably going back to like 2013, just the ethos of it, the self-sovereignty, financial sovereignty of it kind of really moved me at like, like it really hit me. I think it's such a powerful tool. And now with the confluence between compliance needs and crypto usage, right? For so many of us like me, this is the perfect time to be in the industry as a compliance professional. So happy to be here, happy to hopefully share a little bit of knowledge that I can.
Thanks so much, Paul and Melanie. Let's hear from you, Ethan.
Thank you. Yep. Thanks for being for having me. I'm Ethan, and I work at Chainalysis as an economist. My work here largely focuses around DeFi, so this is very topical. Yeah, I think I probably have a very similar background to the other panelists in that I started out in a financial institution, and only a few years here. I've been involved in crypto for a number of years, but more recently joined in a professional capacity. Yeah.
Thanks so much, guys. Yeah, some really heavy hitters in this call. I'm excited to see what we're going to talk about today. I'm trying to kick us off right into it. Paul, would you be able to describe to us what this whole decentralized finance thing even is?
Yeah, sure. I can give it a shot. I mean, it's such a broad thing. It's almost like saying what's the internet in a way. but I'll give it a shot. Decentralized finance, by nature of the term, means it's not centralized. And when we say it's not centralized, it means it does not necessarily involve a financial intermediary for two individuals to be able to transact between each other. So that's a really baseline definition. But really, DeFi, I would look at it as a continuum, right? Like almost like when you look at decentralization, it's not like there's not like one target. It's a continuum based on what definition you're using. And I think that's important here as well. I mean, for me, the most orthodox, true definition of DeFi is two individuals with full custody of their own wallets, their own crypto, being able to transact with each other in any amount at any time, regardless of any legislation that says otherwise. Now, obviously, that's problematic from a compliance perspective when you're a regulated entity and you've got certain obligations. But I would say like that's the traditional definition. There's no interference. It's agnostic. It doesn't care who you are. It's automated. It's way cheaper than fiat. It's internet native, and it's available 24/7, 365. Yeah.
Thanks, Paul. So I've heard a lot of chatter in the industry about exchanges, these centralized entities that seem to advertise maybe decentralized qualities. How do these really differ at the end of the day from stuff like exchanges?
It's interesting. It depends on who you ask. My personal opinion is like there's DeFi and then there's everything else down the sliding continuum. Not that they're wrong or that they're bad inherently. It's just you really need to know what you're getting yourself into. Something like, and I'm not picking on Binance, they're a huge company, they've got many good products, but like something like DeFi on Binance, right? Is it truly DeFi? Not if you go by the most orthodox definition of what DeFi is, because you're doing it through a custodian. There is some permission that is required before you can get into their ecosystem. I would actually equate it almost like the internet is, I think, a really great analogy for blockchain technology and DeFi specifically. Like I would say, say Ethereum is like the internet, and different services on top of that add centralization. So traditionally, I guess what you call centralized DeFi, CDeFi, right? Which is again kind of an oxymoron if you ask me in a way. It's kind of like back in the day for those that started using the internet when it kind of first became commercially viable. Like I remember going to like CompuServe and getting my first internet access through a CD, or like using AOL online. I would say things like DeFi through an exchange. It's kind of like AOL online. It gets you kind of the same experience, but it's very much through a gated community and it's controlled. There's just much more limitation to it. You're just not as free as you would be if you had access directly to the internet as a protocol. So again, nothing wrong with it necessarily. It's just not really true DeFi, but it does allow you to play with the same sort of technologies. You might have some self-custody to a certain extent.
Really, really cool. Yeah, I really like the way you put that with AOL chat. I haven't heard discussions around that in quite a while now. Little throwback. Wow. No, I really want to pick on the point you said before about kind of people being able to transact, kind of regardless of legislation that might prevent them from doing so. It really sounds like decentralized finance might carry some inherent financial risks. Melanie, in your experience, what are the financial crime risks that really come along with the decentralized place?
I mean, no one's like really reinvented the wheel, so there's nothing like really new. There's more just a larger popularity of typologies for decentralized finance. But I've noticed a larger amount of chain hopping being used to launder, where I even had a recent case where funds were stolen from a vendor, and then immediately they swapped to a completely different blockchain on Polygon. The speed at which funds can be moved across decentralized finance is absolutely astounding. For those who don't know, Ethereum transactions are confirmed on average every 12 seconds, which is much faster than Bitcoin's 10 minutes. So like you can move funds extremely fast, and of course in different currencies. Of course, the lack of KYC, especially for all these decentralized vendors, like I'll post in the chat. if you guys click on Uniswap and go check out their page, there's nowhere that's going to request you to provide an email address, username, nothing like that. So there's even less gateways to be able to convert one currency to another. And of course, it's an unregulated environment. And I'm speaking of this not just in the financial crime aspect, but there's a lot of questions around just regulations in general. Like, for example, Seth Green, for those who know him, a person that makes TV shows, had a whole collection of NFTs, and then they were stolen from him. He was going to make a whole TV show with all these NFT characters, but these NFTs were stolen from him, and now there's a legal debate of who actually owns them, because the person who owns them, it's like bail bonds. The person who owns them is the person that holds them. So unregulated aspect to it as well.
Really, really fascinating though. Yeah, not your keys, not your crypto, right? That's what everyone says. Sounds pretty risky to me. Ethan, I'm curious what the data is saying on Chainalysis's end. What are some of the risks that come with DeFi? Where do the funds go? Where are they coming from? What's the financial crime trends that we really glean from the blockchain on this front?
Yeah, absolutely. So I guess setting some context, in 2021, this previous year, we saw roughly $3 billion stolen in some form of hack, on the blockchains, various blockchains, and 2.3 billion of that was related to DeFi. A primary reason for this just happens to be, the nature of DeFi, as the other panelists have mentioned, right? This is very, open, and specifically the code is open source a lot of times. And what ends up happening is, as good as that can be for collaboration and people trying to improve something, it can also be an opportunity for bad actors to find vulnerabilities. And, that has happened not just last year, but it's continued through this year. And our data shows that close to $2 billion, I think through beginning of August 2022, has already been stolen via DeFi hacks. And yeah, once again, it's kind of this double-edged sword, right? The open-endedness of this, or open source side of this, can end up biting you.
Wow, no, that's some really interesting statistics, especially with the growth in this space as well. I think something really important to kind of discuss as well is kind of the vulnerabilities that we talk about when it comes to hacks and exploits. These aren't necessarily inherent to a blockchain like Ethereum, but instead kind of the Web 2 almost applications that are built on top of this blockchain that really we see the vulnerabilities being exploited. So incredibly, there was a really big announcement from Chainalysis recently regarding the seizure of $30 million resulting from the Ronin Bridge hack. So based on kind of our discussion today around the risks, is this something that, based off this seizure, we're really seeing in real time in these investigations?
Yeah, so I would expect, given our ability to see what's really going on data-wise, and our tools, we'll be able to crack down more on DeFi hacks. And as you mentioned, the $30 million that was, as a part of the Ronin North Korean linked hackers. But I would additionally, I guess, point out that one thing I think that kind of goes under the radar here is a lot of the crime isn't new, as someone else mentioned, right? It's just kind of found itself in a less familiar area of crypto, right? So the centralized exchanges did a really good job of, they've improved their security measures because they focused on doing so. And because if you rewind a few years back, that's where a lot of these stolen funds and hacks were occurring. Now you fast forward, a lot of attention hasn't been paid within the DeFi space. These protocols and projects haven't really focused as much on the security aspect of things. And that ends up being a reason why, you end up seeing, attacks here. And so if that ends up becoming a focus, I think together, with our tools that we have, as well as the combined focus of their, efforts, we'll probably see more seizure of funds and less hacks occurring, or fewer hacks occurring.
Yeah, great point. We've definitely seen a huge progression from, especially, everyone likes to talk about the Lazarus group, the North Korean hacking group that is state sponsored. And they've been active for a long time, even before the crypto space was even really mainstream. We talk about the Sony Studios hack that was perpetrated by the same group. And now we see popular hacks on crypto bridges by the same group today. So hacks and kind of financial exploits have occurred in the traditional financial system, and now they're just moving to the Web3 space. Something I really want to pick on is everyone's favorite decentralized application, Tornado Cash, and how this has been utilized and leveraged by the Lazarus group in some of their money laundering activities. And Paul, I want to pick on you here. Could you explain to us exactly what Tornado Cash is and why it's kind of been the topic of mind recently in the news for regulated exchanges, basically for anyone in the crypto space?
Yeah, really hot topic. And the fun never ends, right? Like there's been so many developments this week since we wrote these notes. A lot of these have actually been outdated. But yeah, Tornado Cash really is just a decentralized mixing contract. So it's a contract on the Ethereum blockchain, right? Anyone can interact with it. It's kind of like a wallet. You can send money to it. You get a commitment key. You put that in on the back end after some time, then you get your crypto anonymized. The trail is then obfuscated, right? So for those that use chain analysis or other blockchain analytics tools, simple analogy is just you can't trace through a service, right? And it's the exact same thing with Tornado Cash. You can see things going to Tornado Cash. You'll see things coming out of Tornado Cash potentially. But you can't make a linkage that I sent my money to Tornado Cash and got it out on the other end and did something else with it. That trail is obfuscated. So it was obviously sanctioned by OFAC a little while back. I know other panelists have already spoken kind of a little bit about it. It's obviously unique in the sense that they're not a person. Like the actual smart contract is not a person or an legal entity or a natural person. So there's the whole question of whether, that actually applies, what kind of authority is there. We've seen some things come out more recently, but in general, I don't see it all that much different than probably more level 1 cryptocurrencies, whether you're using Monero, Zcash, obviously Zcash, you've got the ability to be private or not. Monero is totally private. It's a private focused chain. This is kind of the same in a way. For me, I'm thinking like, what's the difference here? Why hasn't OFAC sanctioned Monero or Zcash, right? And I'm thinking, well, probably because, and someone call me an ETH maxi, I would disagree, but I do really like ETH. Probably because ETH has a lot more utility, right? Like people use ETH for so many things, store of value, whatever, like transacting, whereas some of the other coins are a little bit more exotic in their use cases. So, that's my thinking why this has been targeted by OFAC. And obviously the fact that, and I don't know what the numbers actually are. OFAC has said that something like 40% of Tornado Cash transactions have involved North Korean hacking groups, right? Lazarus or whatever. Whether that's true or not, I don't know. That's obviously a bad PR thing. If the majority of your users are criminals or someone that you're at economic and, some would say real war with, right? Like it shouldn't be a surprise that the US government is going to go after it. But yeah, more recent developments for sure. There's been a challenge recently. I think there's about 6 individuals. They're being funded by Coinbase to actually argue the legal merits of whether that sanction is actually allowed, right? Like, do they have the authority to sanction the protocol? There's been a lot of analogies around, well, if criminals rob a bank, do you then sanction the road? I mean, that's a little bit disjointed, I think, but the concept is kind of similar, right? It seems to be a very broad hammer again, whereas, we didn't ban all airplanes when 9/11 happened. We maybe shouldn't be, and again, this is obviously a debate, maybe we shouldn't be sanctioning a whole protocol because some people are using it for nefarious reasons. So that's playing out. We've seen the OFAC guidance that came out, I believe, yesterday, right, where they're sticking to their line. They're saying, okay, it doesn't matter if it's an actual identified wallet address or if it's the protocol, whether attributed through chain analysis or other analytics firms, it's off bounds and it's subject to our sanctions regime. So it's a really fluid, based on a risk-based approach, I think, for those of us who work at regulated financial intermediaries, right? Like, how much do you allow? How much do you not allow? What's your nexus to a US person, right? It's really fluid. It kind of reminds me of, in some ways, of like the Freedom Convoy, where stuff is still really up in the air and people are doing things in, I think, a spectrum again. Some are doing a lot, some are doing nothing, some are somewhere in the middle. So yeah, that's Tornado Cash in a nutshell.
Lots to discuss there, definitely. I think the really interesting example that I always like to bring up when we're looking at technology like Tornado Cash is something like the pretty good privacy technology, allowing us to encrypt text messages, emails, utilized by a lot of big businesses today that are obsessed with security or privacy. But obviously this protocol and this security technology is utilized by criminals, in their text messages, emails, overall to evade law enforcement. Is this technology suddenly now eligible for sanctioning, even if it doesn't necessarily have that financial aspect to it? I think that's a really great analogy when we talk about the sanctioning of Tornado Cash and why there's a lot more questions around it than maybe some other more traditional sanctions moves that we've seen from OFAC. So based on kind of what you said, I want to turn to Mel here and ask a few questions about how she thinks regulated entities can hope to mitigate the risk presented by Tornado Cash. It really seems like compliance is growing more and more difficult for regulated entities, especially when it comes to sanctions compliance.
Yeah, especially with the guidance they released, basically saying like, yeah, you're still gonna have to report those even if it was an accidental dusting, like some trolls have been sending out to known addresses. But honestly, like it's going to come back down to training and investing in good tools like Chainalysis Reactor and KYT tools, so that you can be notified when your users or when your platform has that kind of exposure, so you can make those reports to OFAC, because again, they are coming down hard on that. I mean, to learn all this, because this is such a big field, as you guys have heard throughout the day, blockchain analytics, there's just so much to learn. There's a lot of certifications out there that teach you the tools of the trade and some techniques, but also just transact yourself. I'm not saying do a transaction through Tornado Cash, but maybe do one through a decentralized mixer, see what the process looks like. Is there any unique identifiers we can potentially spot proactively when the blockchain analytics tools have not identified an address to be part of illicit activity? And so, yeah, encourage people to learn on their own, read white papers, keep up with the industry is a big part of it. Just as criminals try to beat us, how we find them, we're trying to always try to stay on top of identifying their new typologies. So that requires being on Reddit until like 3 in.the morning, reading up on, what's the latest developments. And of course, investing in exchange partnerships, kind of opening more communication roads between exchanges, virtual asset service providers, and sharing information with law enforcement and intelligence in our reports that we file with regulators, because our job is to educate them on also what to provide guidance and what to look for. So just all around, my answer is always going to be education there.
Yeah, I'm starting to notice a trend in this space. It really seems like training and investment in advanced technology really seems to be dominating this space, and how we can hope to combat this almost seeming tidal wave of crypto crime activity that we're seeing on chain. So let's refocus this discussion on stablecoins now, but still stay within the lens of our favorite DApp, Tornado Cash. So obviously we see many different stablecoins discussed in the crypto space, but obviously some really dominate the space. Melanie, would you be able to give us a quick run through of kind of the major stablecoins that we see in the space?
As is tradition, forget to unmute myself. Just to give a bit of background before we dive into that, for those not familiar with stablecoins, it is a cryptocurrency that somebody claims is worth a certain amount. 1 tether equals $1. But you can't just magically make that happen. People have to believe it's worth that much, as the market relies on supply and demand. So in order to make people believe that, you need to collateralize it. And some currencies like Tether, which is a popular stablecoin, they collateralize it by having $1 in their bank account for every Tether in circulation. So I believe 1 Tether is $1 because of that. And then there's other techniques like collateralizing using bars of gold, using cryptocurrency as collateral, which is interesting if you've been following UST and Terra and Luna. And then the last one is to have it algorithmic, where you have a smart contract on Ethereum that burns and adds to the supply depending on what the current price is. So you don't have to put anything in a bank account. You have a smart contract doing that for you, which again, very interesting if you start researching the downfalls of that. And yeah, there's some that are more centralized than others. Tether/Circle, they have the ability to freeze and blacklist tokens. MakerDAO, which is the issuer of DAI, a algorithmic collateralized stablecoin, they don't freeze anything. And rather than operating on a fiat peg, they utilize that algorithm in order to manage that price. I always say it's a centralized stablecoin if they can freeze your funds, which many of them can. So at that point, I don't really call it decentralized anymore.
Wow, that's really, really interesting. And honestly, not something I was even really aware of, that these stablecoin issues really had so much centralized control over their currency. Now, Ethan, I want to turn to you and ask some questions about kind of the stablecoin activity that we see within the space. It'd be my expectation, given kind of the crypto space's obsession with decentralization, that stablecoins like MakerDAO and DAI would dominate the market. Is this really what we see?
Not yet. No. Actually, right now, what we're seeing are like the more traditional ones, like Tether and USDC, have the majority of the market share. And you can think about that in terms of market capitalization. Both of them are in the order of billions, and Tether has, I think, close to something like $68 billion. And then you compare that to, DAI, as you mentioned, and that's more close to $7 billion. So orders of magnitude larger. And then I guess when it comes to the user base that we see transacting on each of these sorts of coins, it's really interesting if you take a look at the transfer sizes, right? And things like Tether have a skew towards more to smaller transfer sizes, which you'd assume are closer to everyday traders as opposed to larger institutions. So you can think of Tether user activity being much more individual based than potentially other stable coins.
Wow, that's really interesting and honestly surprising data. I've definitely seen some big news headings about Circle, blacklisting the tokens that are held within Tornado Cash. It really makes me think that people, are generally scared of centralized entities, especially in the crypto space, that they tend to stay away from. But, the data isn't really supporting that. Mel, what kind of financial crime trends and typologies have you observed during your investigations with stablecoins? Is there any particular cases or case typologies that you'd be able to share?
For sure. One that we've kind of seen a lot more since the pandemic has been a large muling groups utilizing very popular stablecoins in order to move funds through large exchanges and laundering them. You'll often see like 50 to 100 accounts being opened in a very short amount of time, and then millions of dollars being deposited either in a stablecoin or in US dollars, converted to the opposite, and then quickly withdrawn from the platform and eventually consolidated at another point in order to cash out. We have a few ideas as to some of these groups, especially that many of them are located in Colombia, South Africa, Spain. So we have a bit of an idea as to like the predicate offense that's happening. But I will say like the most popular I'm seeing is definitely muling when it comes to stable coins, which makes sense. Criminals don't want to be losing funds. They want to move funds fast, and they don't want to see the value of what they're moving go down. So stable coins is the perfect thing to do that. And stable coins are, you use these to connect to all these decentralized finance applications. So you have an all-in-one perfect item in order to launder your funds.
Yeah, it really sounds like the perfect coin for not only financial criminals, but also, the normal cryptocurrency user as well. There's a lot of benefits and, albeit some drawbacks to stablecoin utilization, but the technology is really, really exciting. I want to kind of finish off here with some closing thoughts. And Paul, I want to kind of pass this ending to you. And so stablecoins and the overall tech solutions that they seem to provide, that we've kind of highlighted in our discussion today, it really seem to be revolutionizing the cryptocurrency market. And they're really, the talk of the news these days. Would you be able to leave us with some maybe parting thoughts on the future of, DeFi and the future of where stablecoins will fit into the decentralized ecosystem?
Yeah, nothing like speculating in the crypto space because most people are proven wrong. So thanks for that, Alex. But yeah, a couple things that come to mind for me. I think when we think about DeFi and stable coins, it's almost like decentralization is not important until it is. And this is one of those examples to me with Tornado Cash for a lot of people, right? I saw a question in there around, give me a legitimate reason why you would use Tornado Cash. And I'm not saying like, I don't personally use it, but like I could see many legitimate use cases, just like, if you have nothing to hide, why are you worried about privacy if you have nothing to hide? Like that's just a kind of a loaded question in my mind. And I think these things are all coming to a head. I wouldn't be surprised if you see kind of more fracturing around really, truly anonymous smart contracts, right? Like there was a dev that got arrested in the case of Tornado Cash, almost kind of going the route of what Shapeshifter did in the past, where like you truly get decentralized and truly get anonymized. And you don't do it through a DNS, so your website gets shut down on the front end. You do it through like, an unmutable domain or something, like unstoppable domain or something, where, you know, nothing can shut you down. I see that probably happening more and more for those Puritans that like really value privacy more than anything, just on a fundamental level. But also like things that come to mind are the ETH merge, for instance. What's I think really important is like a credibly neutral blockchain that doesn't give a damn about anything. It just fulfills the transactions that are given to it. And then it's almost like the internet in that sense, where it truly is agnostic. And then you've just kind of got different applications, different protocols, just like you do on the internet, interacting with it day in, day out. Can't really be shut down. You know, other things that come to mind are just like when it comes to stable coins, in a way, I find the whole thing really funny because you really are trusting a centralized entity. It's almost like fiat of fiat. It's kind of what I look at it, right? Like you are putting your faith into something that was made by somebody based on something else that was made by the government. So in a way, the whole thing is a bit of head scratcher from that perspective. And like, that's why the whole algorithmic stable coins to me are such a cool concept, because it truly is to me based almost like on a fiat ethos, where you truly believe in the value of this currency. And as a community, you give it this value and it will not sell for less or more than that, right? It's like the market kind of figures out what the value of these things are. And like, to me, it's a bit of an aspirational goal. I think maybe we'll get there eventually, though. I think that's really cool. That's innovation. And then just the last thing that I would say is like, one big problem that I deal with as a DeFi user in general is always like the on and off boarding. What would be really cool if there was a way where we can all figure out as a crypto community to really, you know, not need the fiat world in a way where like we can inject value digitally into stuff like totally and not autonomously from the fiat world, right? Where you don't need exchanges to off and on ramp fiat. Like that value can just be natively created digitally within crypto. I don't know how you do that, but you know, I'm sure there's people way smarter than me thinking about how that can be done. And it's already done to some ways with like gaming and NFTs and stuff like that. I get it, but like, so you're totally autonomous from the fiat world, right? You know, for some people, that's a really cool thing. Yeah, I don't know. I kind of leave it at that. I know it's kind of all over the place, but there's some things that kind of, you know, went through my mind as I was thinking about this a bit.
Yeah, very well said, Paul. And yeah, like exactly like you said, we all love to speculate here as professionals in the crypto space. So yeah, guys, thanks so much. I'm going to open it up just to a Q&A. So you keyboard warriors, definitely start typing away. I've already got one question here to all the panelists. Do you believe sanctioning Tornado Cash could become a legal precedent to come against technology in this space? Ethereum, for example. Paul, let's shoot that one off to you first.
Yeah, in a way it is, right? And we've seen the OFAC FAQs around how they're not sanctioning the software, and you can go ahead and publicly redistribute the software. I think they're trying to get ahead of a little bit of this challenge to say, you know, we're not banning the code. The code is there. You can go ahead and publish it and show people how it works. Just don't use the actual protocol. Yeah, I see it as a problem. I think it's going to get fought for a while. How it's actually going to end, I don't know. But yeah, it's very interesting.
Definitely, yeah. And I think, you know, we know least of all, right? That's the trend that I'm noticing personally, at least. I did see a question earlier here in the chat that I thought was really, really interesting. Is what are your thoughts on Binance automatically converting USDC and other stable coins directly into their own stablecoin, BUSD? Do we think that this is something we're going to see more in the industry? Maybe I'll kick this off to Ethan and Mel. Maybe you guys would be able to give some perspective on this.
I was going to say you first. I don't know if I have anything specific outside of, yeah, no, sorry, Melanie, can you go first?
For sure. I mean, I'm personally against it. It's just the second, like somebody does something on my behalf, especially when it comes to cryptocurrency, I get it. And Binance is a centralized exchange. So my personal thoughts on it are, I don't like it. But yeah, curious, Alex, as well, if you have any thoughts on that, if you've used BUSD.
Personally, I'm not a huge user of BUSD, but I do see the benefits in terms of kind of market cap and, kind of management on the back end when it comes to their stablecoin utilization. It's a lot easier to consolidate one coin in your treasury than it is to manage many, especially with these, many coins having smaller market caps than others, and, others being massive like Tether, USDC, and BUSD. One question in the chat here. Hey, Alex, could the panel provide guidance on blocking OFAC countries from the OFAC site? It seems like reading into each sanctions program per country is tough to manage. Are companies expected to block every country on this list? Yeah, OFAC sanctions are definitely a complex one. Any thoughts from the panel here? Just feel free to hop in, guys.
One thing that I really appreciate is vendors in this space. I got to say, this is a really good thing to have partially outsourced if you run a compliance program, because like when it comes to address management, whether we're talking about wallet addresses or SDN names, and this applies as much to OFAC as Canadian sanctions for those of us operating also in the Canadian space. Vendors are your friend. They'll do it very quickly. Those automated blocks can pop up right away for new accounts, for existing accounts. The unique thing is obviously with OFAC, right, with wallet addresses for crypto. I'm not aware of any other authority that does this worldwide. So at least it's easier in the sense that you're only looking at one source. Right, and some are freezes, some are blocks. It's super complicated. I don't think you can treat them all the same way. I don't think there's really an easy answer for it, right? Like some things are country specific, whether we're talking about Cuba from America, or we're talking about like North Korea in certain cases, whereas Iran, there might be exceptions depending on the transaction, stuff like that. Super complicated. I don't think there's an easy answer. I mean, the easy way to do it would be just to block them all, but from a business perspective, right? Like, can you achieve that? And is it financially viable for you to do that? I don't know.
I would say as well, like have someone on your team like just quickly educate themselves on the different types of sanctions, because really all you need to learn is like which ones has comprehensive sanctions, which one is like completely this country's a big no-no, and all the other ones you can use. OFAC does have a search tool where you can plug in the name of the company, the name of the individual, and they'll tell you if that person like falls under any of the sanctions list or is a potential match. But for countries in general, yeah, just learn which ones have comprehensive sanctions, but it does get a bit trickier for like Crimea. Crimea is not like a province or anything in Ukraine, it's a region. So even like some postal codes, like one house beside the other, like one of them is technically in Crimea, the other one's not. So that one gets a little bit complicated, but at least get the comprehensive ones down.
Yeah, great points all around. I think I personally want to give a shout out to Chainalysis on kind of like this question, especially to Paul's point regarding vendor solutions really being the leading solution for sanctions team in this space. Yesterday, I saw the OFAC news designating, several Iranian ransomware operators, and I was having a tough time finding kind of cryptocurrency addresses that might have been sanctioned or associated in my work in the actual OFAC site. I was just having trouble navigating it. And so I thought, what, why not? Why not just check out Chainalysis real quick and see if they've updated the site? And this might have been 5 to 10 minutes after the designation was announced. And Chainalysis had already aggregated these addresses, allowing me to quickly mitigate risk for our customers and, do some investigative work that needed to be done. Ethan, one last kind of a closing thought to you on kind of vendor solutions in this space. How do you think Chainalysis is really the leader in kind of sanction solutions? And do you think there are any other vendors that are doing kind of really fantastic work as well?
I don't know if I would want to do any service to our competitors, but at the same time, I will say that, yeah, no, I think what sets us apart, well, one, we have a number of investigators in the field that are working on this and come from backgrounds that are very pertinent to this. And then I think additionally, what ends up happening is because we have such a broad, like people network that is, we're able to be very clued into new things that pop up, and therefore, and since we already have this tooling in place, it's really quick on our end to plug in an address, see where things are flowing fund-wise, and then see how they're attached to potentially illicit services, and come up, spin up an investigation really quickly.
Yeah, one way that I really think Chainalysis is leading in the space is simply put kind of this attitude of we're all in it together. Chainalysis offers a free sanctions oracle, and I believe they're coming out with an API later in this year that, any decentralized service, any centralized service can tap into, ensure all of their transactions are screened for any sanctioned addresses or sanctioned actors to make sure that they're all complying easily. I really don't think there's any excuse in the space anymore to not be complying with sanctions rules now that Chainalysis offers this, fantastic and free service. I'll give it a minute for any kind of like final questions to pop in. But otherwise, I do want to give a shout out to Melanie and a handout that she helped design alongside TCAE. I believe this has been posted in the chat many times, but if it hasn't, go ahead and post it again. It really offers some really fantastic resources on how to learn more about crypto, how to learn more about compliance, some of the leading companies in the space that have some really fantastic, webinars, documentation, programs that you can take. It's really, really a fantastic way to learn. I also want to shout out TCAE's, training solutions. Melanie is one of the people on the training team, and I can say personally, being trained by her, she's definitely one of the best in the space. And, frankly, it's one of the best people to learn from.
And just to quickly shell Alex as well, one of the links in that handout is a talk he recently did on the Compliance Time podcast, talking more about the Tornado Cash sanctions for those who want to hear a bit more of it. Really good job.
Thanks, Mel. And yeah, if there's no more questions, guys, I think it's time to move on to virtual networking. Give us a chance to get to know our coworkers a little bit better, know the panelists a little bit better, meet some new friends. But yeah, thanks so much, guys. I want to really thank all the panelists today for coming in, giving their opinions and thoughts on, stable coins and DeFi. There's certainly a ton to discuss on this topic, and we barely scraped the surface today.